All right, hello everyone. Welcome back to another market review from Silent. This is the NASDAQ September contract for 2025. We're looking at the weekly chart again. Today was Friday, so we continued that rally from yesterday, and it ran all the way up from the main threshold of the weekly down close candle up to the high, and a little bit past it, taking out a high from 2 weeks ago. Traded back down into the range and closed as a TGIF on the current weekly range here. So we traded up into 845 and pulled back down from the middle of toward the middle of the range there. On the daily chart, again, we were referring to this buy-side imbalance. Price traded into it yesterday, rallied up. We opened, traded lower, and traded higher in the day there, and ran up and tested the main threshold of that daily order block again. We swept some buy-side liquidity and took out the high from 2 weeks ago, all in the same move, and pulled back down into that daily sell-side imbalance. I'm still feeling bearish, especially after today's close. In order for me to have felt a little bit more bullish, as if we would have closed above that daily main threshold level. But since we ran up into it, clipped the highs, and then traded back lower and closed basically as a doji, there's nothing really here that would tell me that the higher time frame narrative that we've been fleshing out is changing whatsoever. Until we get a closure above that order block main threshold, I think we're still good for more downside. Dropping down to the 4-hour chart, again we swept that sell-side liquidity and rallied up into this most recent SIBI. Inverted that SIBI with the rally here, and price staying inside and respecting the constant encroachment of that range. We rallied up, overtook this wick, consolidated inside the upper portion of that wick, and it was off to the races all day yesterday. We gapped up in price overnight, and by the time 12 o'clock come around, we hit that buy-side liquidity of the 4-hour rejection block that we were watching in the last video. Price rallies up a little bit more during the first couple hours of the day, and then we sink it down back into this buy-side imbalance and down close candle, which is an order block here. And if you put a fib level from the weekly range low to the high and mark out 20 to 30%, our pullback that we had today fell just inside that range there. On the hourly chart, again, we see that original consolidation idea from the open of the week, traded down, did a reversal on top of that mitigation block we were watching, broke the high here, consolidated, and then rallied up all day yesterday, gapped up, traded through the buy-side liquidity, and then did a Judas swing type move right on the open here into those daily levels, and they sunk it. Dropping down to the 15-minute chart, I want to look at Thursday price action and today's price action. Yesterday, again, we opened up and used this as a breaker to send price higher towards the buy-side liquidity. Asia range here, we rallied through London and consolidate in the pre-market. Then finally, as the New York open, rally up and do a Judas swing. Notice how we did 3 standard deviations of the Asia range higher on this swing, and when I was waking up this morning, I saw that we projected higher by 3 deviations and was automatically looking to be bearish because our higher time frame bias is bearish, and we hit 3 standard deviations of the Asia range around the open of New York, and we're also in a higher time frame premium key levels. It's Friday, so we're expecting, if it doesn't just skyrocket, we're expecting it to pull back into the range. So we cast 3 standard deviations of the Asia range higher, hit that, and then it melts down to 3 standard deviations of the Asia range lower, which nests with that 15-minute breaker from yesterday, which is the low of the day. In the afternoon, we consolidate all day, spend time accumulating inside this buy side imbalance, and then finally send it up and close near the new day opening gap right there. 5-minute chart, let's break down this a little bit. So we have our consolidation, the pre-market price rallies above and is steadily taking out buy side liquidity as it's marching up into these higher time frame daily levels, and then price begins to slow down as we get into 9:30 open, and we have 8:30 news for this day, which is this event right here. So 8:30 produces that Judah swing. We rally up and begin breaking down right before the open at 9:30. This is our first indication of a market structure shift. It creates a sell side imbalance and closes below, in this candle, the buy side imbalance, which would have been something that we'd be looking for to be bullish if we were going to continue up higher on the day. But because these levels begin failing, after we test them here, we get a redelivery into the order block and this buy side imbalance, but price is not able to create a new high from this range and begins to slow down once again after running into the sell side imbalance and the wick here. The wick we marked out and are looking at equilibrium at that level. So the constant encroachment of this wick would be a level that we would be looking at for price to be allowed to color outside the lines of this sell side imbalance. And we do just that. We trade up into that wick, but no candle body closes above the constant encroachment here. So after this candle closes, we're all set to confirm our bearishness, especially after this candle closes here, because we have a 3 candle swing high formation. If we're shorting in the sell side imbalance, our high would be above, or our stop loss would be above this high. If we're entering in this wick, stop loss also above that high, and we will get confirmation by price not closing above constant encroachment. Price begins to drop down significantly, does a market structure shift, and leaves a small imbalance there and produces a cascade of sell side imbalances on the way down as it trades through the sell side liquidity of 8:30 news release and completes the TGIF pullback by 11 o'clock there. Price creates a breaker. So we have a breaker idea here. You can call it a mitigation block if you like. I'm just seeing it as a breaker. Price creates this high, drops lower, and then trades above it. If we're going to continue the idea of TGIF being respected for the day, we want to see price stay above 50% of that bullish breaker. So price does that all throughout the lunch hour, and as we go to 1:30, we drift down one more time after breaking a high here, which there's no imbalance. Again, if you remember from the previous episode, whenever we're breaking a high and we want to confirm that the accumulation is ending, we're looking for imbalance. So there's no imbalance here. It's telling us price needs to trade back down one more time, and most likely that level it's going to be trading down to would be equilibrium of the breaker. Price respects that. Going into 2 o'clock, price rallies slowly and then just barely takes this high here with this wick, consolidates, and then trades back towards the new day opening gap. This is the 1 minute chart of the NASDAQ 2025 for today's price action on Friday. We have all these levels from the 5 minute chart being brought down onto the 1 minute. We have our first presentation fair value gap on the 9:30 open. I'm using this gap because there's an imbalance here for one, and this candle that is included is just a doji, so I extended it from the low of this candle to the open of this candle. So we're including that entire range for the imbalance. We get our opening range imbalance model to play out, and it delivers all the way until 11 o'clock. By the time 11:30 comes around, we're having our indications of a reversal happening, or telling us signs that the TGIF setup has played out, and we're going to likely consolidate for the end of the day and pull back up into the range that was produced during the sell side delivery. Consolidates all the way until PM session starts. Our PM session first presentation fair value gap. Price takes a sell off from that level down into the mean threshold of the breaker. Consolidates, rallies up, reaccumulates in here, and breaks through the PM first presentation. So after we get a shift above that, anytime we trade back down into it, we want it to be respected as a buying opportunity. Price sees that offered twice, and finally as a target for the new day opening gap, and we draw up into there perfectly by the close. All right, so that's going to be it for me today. Hopefully you learned something, reflect on the things that you've done this week in your trading. Hopefully you'll be able to grow and increase your understanding for the week to come. If you have any comments, please let me know, and also drop a like and subscribe, please. It helps the channel a lot. I'll catch you guys next time. Thank you for watching, and be safe.